Hi guys. So this is going to be a very important video for the upcoming SEBI Grade A 2019 examination because this is going to relate to the SEBI current affairs related to the securities market. So we are starting our discussion from the month of January 2019 and we are going to divide this particular month into two parts. So this is the first part of the video and we are going to decode the important current affairs relating to the SEBI and the securities market which were in news and which can be asked in the examination in this particular video. Also at the end we are going to discuss some important MCQs as well. Now before proceeding forward, let me quickly tell you about the excellent results that we have achieved over the past few years. Now in 2017, in RBI Grade B, we had 27 final selections from our students, and in NABARD Grade A, we had 11 final selections from our students. And in 2018, we repeated the same success story. And in RBI Grade B, we had 70 plus final selections, and in NABARD Grade A, we had 26 final selections. Also in 2018, for SEBI Grade A examination, 150 plus of our students they got the interview calls, and for IBPS AFO 100 plus of our students they got the interview calls. Now if I talk about the different individual courses that we are providing, then they include RBI Grade B, SEBI Grade A, NABARD Grade A, RBI Assistant and IBPS AFO examinations. Now, apart from running the separate courses for all those individual examinations, we are also having some combo courses which you can avail. So we have a combo for RBI Grade B, NABARD Grade A and SEBI Grade A. We are also having a combo for RBI Grade B, NABARD Grade A, SEBI Grade A, RBI Grade B and NABARD Grade A and SEBI Grade A. So we have all the requisite combos that you can choose from and you can choose the appropriate course as per your requirements. Let me also tell you about our new course, which is very important for all the banking exams. This is the QRE course. QRE, that is quantitative aptitude, reasoning ability and English. So all these aspects which are very important for all the banking exams, they are going to be covered in this particular course. So let's start with our first news item, which is with regard to the physical delivery of derivatives. So we are all aware about the derivatives. Derivatives are those instruments which derive their value from the underlying asset, which can be a commodity, which can be a stock, or which can be anything. Now SEBI wants that for the purpose of these derivatives, now they are deriving their value from something else. So SEBI wants that something else should be physically delivered in order to curb the volatility in this particular segment. So that's why SEBI has said that all the derivatives will be settled physically to curb volatility and promote the borrowing as well as lending. Now what happens in physical settlement is that the traders, they have to take delivery of the shares on the settlement day against the derivatives position. So if you had bought a derivative on some share, then you would have to actually take that particular share on the delivery day. So suppose if you were to enter in a call option, you were to buy a share of say Reliance Limited at a particular date or time in future, then you would have to actually take the delivery of that share of Reliance. You cannot just settle the difference in the price of that particular share on the actual date of settlement. So you would have to actually take the share. Now earlier this physical delivery, it was a lackluster because a small number of stocks and they were in this particular physical delivery segment, and the market was also not very clear about whether it is to be applied to all the stocks. So now this is being made compulsory and this is going to happen in a phased manner. The first 50 stocks with smaller market cap, they will move towards a physical settlement by April this year, that is April 2019, and the next 50 by July 2019 and the next 50 by October 2019. So this is going to work in a phased manner. So if we take a look at the meaning of derivatives, and then the derivatives, they are the instruments, they are the contracts between two or more parties whose value is derived on the basis of some underlying financial asset. So underlying financial asset, it can be stocks or it can be any other thing like indices, it can be currency, commodity or foreign exchange. Now next one is with regard to a panel to link research to policy making. So whenever we are making policies, it is advisable that they must be backed by proper research. So in this regard, SEBI has set up a research advisory committee, and this advisory committee is going to assist in formulating the proper policies and help in undertaking the research which is relevant for the development and regulation of the capital markets. Now, as per SEBI, this committee is going to comprise of prominent financial economists and market practitioners. And an important thing to note here is that the committee is going to be headed by Mr. Shankar Dey. Another key task of this committee is going to maintain the databases which are relevant for the capital market regulation and research. So it is going to deal with different aspects which are associated with the research in this capital market segment. So among the other functions of this committee, it will be defining objectives, scope and direction of the research, which would be relevant for the developing the proper regulations for the capital market. And this is going to focus mainly on developing linkages between the research and the policy making. Now next is about fresh offer documents if the issue size is changed. Now what happens is whenever you have to come up with an issue, say you have to come up with an initial public offering or an offer for sale, you have to issue some offer document. Now if you are changing the size of that particular issue, how often do you need to change that offer document? So this is the question here, and in this regard, these new rules have been framed by SEBI. So SEBI has come out with the new rules that require the filing of fresh offer document in case there is a change in the issue size. Now, as per these new norms which have been introduced recently, a company would be required to make a fresh filing if it alters the fresh capital raising amount by more than 20% in an IPO or by more than 50% in an offer for sale. So you came up with an IPO or you came up with an offer for sale, you fixed certain amount, but now you are changing that particular amount of the issue. So you can change that amount by up to 20% in case of an IPO and up to 50% in case of an offer for sale without having to bother about issuing of fresh offer documents. So this is being seen as a positive move by the market regulator, as there is this change in this OFS, that is offer for sale, and earlier for both these particular categories the requirement was of 20%. So if you were changing the issue size by 20%, then you would have to come up with fresh offer documents. But now this has got up to 50% for offer for sale, and this is something which is very positive for the offer for sale segment, because now they need not worry about issuing fresh documents. They can simply concern themselves with the raising of proper amount of money. So these new amendments which have been made, they are a part of the recommendations of the SEBI's Primary Market Advisory Committee and ICDR Committee. Now the proposal was cleared by the SEBI board in June last year, and this, if we talk about this particular ICDR committee, then the SEBI had constituted this ICDR committee under the chairmanship of Mr. Prithvi Haldia in June 2017. So this is something which is very important, and the committees, they can be asked in the upcoming SEBI examination. So the SEBI had constituted this committee to review the regulations and simplify the language and complexities in the existing ICDR regulations. So what are ICDR regulations? ICDR regulations, they are basically related to issue of capital and disclosure requirements. So in order to revamp, in order to simplify these regulations, this new committee was constituted in 2017 by SEBI. And if you talk about these very two simple terms, one is IPO and the second one is OFS. IPO is initial public offering. So when a company is going public, it is issuing its shares to the general public for the first time. It is termed as initial public offering. And when it comes for this particular issue for the second time, it is termed as FPO or follow-on public offering. And if you talk about the offer for sale, then this is a very simple method of share sale. In this particular method, what happens is, if the promoters in a company, they are having certain amount of shares, and what they can do is they can sell those shares through the stock market platform, and they can unlock the capital of the company. They can meet the public shareholding norms which have been prescribed by SEBI. So in OFS, simply the shares which are already existing, the shares which have already been issued and they are held by the promoters, they are now being issued to the public at large for different purposes. Now next is about the cybersecurity framework for mutual funds. So SEBI has come up with a new cybersecurity framework for the mutual funds and asset management companies in order to guard against the breach of data leak. So mutual funds, they are handling a lots of sensitive data about the investors. So that's why this framework becomes very essential. And these new norms, they are going to come into play from the 1st of April 2019. Now, as per the new norms, the quarterly report, which would contain the information with regard to cyber attacks, threats being experienced by the mutual funds, and the measures they are taking to tackle those particular threats, they are going to be submitted to SEBI, and this is going to be submitted in a soft copy. Further, as per the new norms, the entity would have to formulate a new cybersecurity and cyber resilience policy document, and this document is going to prescribe the framework which needs to be followed by that particular mutual fund or the asset management company. And in case there are deviations from this particular framework, you would have to disclose why you deviated from this particular framework. Further, this policy document which has been framed, it is to be reviewed by the board at least once annually. Now, next one is with regard to the portfolio concentration norms for ETFs and index funds. Now, ETFs are exchange traded funds. So whenever we talk about funds in the capital market, we are basically referring to a portfolio of securities. So SEBI has now announced that the new portfolio concentration norms for ETFs and the index funds, they are going to come into play. And as per these new norms, the index would have a minimum of 10 stocks as its constituent. So if you are forming a particular fund, then you should keep at least 10 particular stocks in this particular fund. You should not simply be following any one particular share. Further, the SEBI said that the index fund issuer should ensure compliance with the new norms for all its ETFs and index funds at the end of every calendar quarter. So the compliance has to be ensured on the quarterly basis. So if we learn about the ETFs, then ETF or exchange traded fund is basically a marketable security. So this is basically a unit of the fund which is being traded in the market. So ETFs, they can track a stock index, they can trade a commodity, they can trade bonds, or they can they can track a basket of assets. Although they are similar in many ways with regard to the mutual funds, but they differ from the mutual funds in the sense because they trade like common shares on an exchange. So if you are having units of an exchange traded fund, you can trade them easily on the stock exchange. Now, as per the new norms, whenever this particular ETF or exchange traded fund is going to be constituted, it will have a minimum of 10 shares or 10 stocks as its constituents. Further, for a sectoral or thematic index, no single stock shall have more than 35% weight in the index. So what does this mean? So if your index is based on any particular segment, so if our index is, say, our our index is a pharma exchange traded fund. So we are basically tracking the pharmaceutical stocks. So no one pharmaceutical stock should have more than 35% weight in the index. And if it's a general index, if we are just tracking some general shares, then no single stock shall have more than 25% weightage. Further, the weight of the top three constituents of the index should cumulatively not exceed the 65%. So basically, we want that the index should be a diversified one. It should contain different stocks, different sorts of stocks and shares, and it should not be basically dependent on any one particular stock or commodity. Next is SEBI tweaks norms for commodity exchanges. Now, commodity exchanges, like their counterpart stock exchanges, they are promoting the trading in the commodities. Now, these particular commodity derivative exchanges, they would have to disclose the quantum of trading which is being done by the farmers and other participants, which may include millers or wholesalers on the exchange platform. So as per a very recent circular which was issued by SEBI, SEBI directed that the commodity exchanges, they have to disclose the interest and the turnover of the various categories of participants. So basically SEBI wants to know who are the people who are basically participating on the commodity exchanges, who are entering into the derivative transactions. Like there may be farmers, there may be farmer producer organizations, there may be different value chain participants, or they may even be foreign participants or financial institutional investors. Now, currently the commodity derivative exchanges, they disseminate the turnover data for only two broad categories of participants. One is clients and other is proprietary. So earlier there were only two categories, but now SEBI wants a more clearer picture, and that's why the number of categories of participants, they have been increased. So if you learn more about this particular news, then the basket of the people who are going to be now covered, this is increased, and the value chain participants, this is going to include processors, commercial users, importers, exporters, traders, stockists, cash and carry participants, producer and wholesalers, among others. So a whole lot of participants, they are going to be now covered and their data is going to be disclosed. Now to begin with, the stock exchanges, they would have to make disclosures on a weekly basis for every Wednesday by next Wednesday by October 1, 2019. So this is basically about the compliance tenure. So basically the compliance is going to start from the 1st of October 2019, and this is going to be done on weekly basis on every Wednesday. So this particular move is important because a large section of the market players believe that the commodity market turnover is largely dominated by the speculators. So now we are going to have clear picture who are the actual people who are participating in the commodity market. Now next is SEBI amend guidelines for REITs and InvITs. REITs are real estate investment trusts, and InvITs are infrastructure investment trusts. So SEBI has amended the guidelines with regard to REITs and InvITs with regard to the process of public issue of their units. So these trusts, they have to come up with a public issue of their units so that the general people like you and me, we can become a participant in these trusts and we can gain benefits of the real estate and the infrastructure investment segment. So these particular trusts, they can now accept only ASBA applications, that is applications supported by blocked amount. What is ASBA? We are going to learn in the coming slide. Further, the managers on the behalf of these particular trust, they will have to announce the floor price or the price band within which these units, they have to be issued. They have to be announced 2 working days prior to the opening of the bid in case they come up with an initial public offering. So SEBI has said that these amendments, they are basically to rationalize and ease the process of public issue of the units of REITs and InvITs. So if we learn about these particular instruments, then the real estate investment trust and infrastructure investment trust, they are basically innovative vehicles. So through these vehicles, general people like you and me, we can invest our money in the very big real estate projects or infrastructure projects. So individually, it would not have been possible for us to put our money into real estate or infrastructure, but now we can become a small shareholder, a small unit holder in these particular big projects through these particular trust. Now, what is ASBA? ASBA is application supported by blocked amount. So if you are purchasing units of these trust, what would happen? The money is going to be deducted from your account if and only if you are allotted the units. So money is not going to be debited unless and until the units, they are going to be allotted to you. The money is simply going to remain blocked in your bank account under this particular ASBA procedural system. So this is now going to operate for REITs and InvITs. Next is custodial services in commodity market. So SEBI has permitted custodial services in the commodity derivative market. So this would include participation of institutional investors like mutual funds in this particular segment. So what happened is, currently the regulation on custodian of securities, they just provided for safekeeping of securities, gold or other instruments, title deeds of real estate and other incidental services. So custodians, they were basically now concerned with attaining the custody of securities or gold or deeds of real estate. So they were just keeping these things in their safe custody. But now, as SEBI now is moving towards the physical settlement of commodity derivatives, it is very essential that there must be proper custodial services which should be available for taking care of the physical commodities. So now the custodial services, they are going to extend towards the protection of goods which are the underlying assets of commodity derivative. So this move will enable or will improve the participation of the big investors like mutual funds and portfolio managers in the commodity derivative market, because they are now going to be sure, because there is a custodian, so their assets or their commodities, they are going to remain safe. So as per the new framework, the custodians, they will be permitted to add commodities as an asset class and provide physical delivery of both securities and commodities. So custodians, they would be taking care of both the securities as well as the commodities which are under their purview. Now next is about artificial intelligence tools by stockbrokers and depository participants. So stockbrokers and depository participants, they are now increasingly using the artificial intelligence tools, and now SEBI is worried that these artificial intelligence or machine learning system, they are just black boxes. We do not know what is going inside them, and their behavior cannot be easily quantified. So that's why SEBI has asked these brokers and participants that they would have to make quarterly disclosure with regard to their compliance with the cybersecurity framework which is issued by SEBI. So if they are making regular compliances, regular disclosures, then they're going to ensure that their systems, they remain compliant with the SEBI regulations. Now next is with regard to uniform membership in equity and the cash derivatives segment. So SEBI has issued the norms for uniform membership in the equity, cash or the derivative segment. So you would not have to have separate membership for both these particular segments. Equity cash segment is with regard to the buying and selling of securities in cash, and the derivative segment is basically with regard to the trading in derivatives. So the membership structure which is going to be applicable in the equity derivative segment would also be implemented in the cash segment from the 1st of April. So this is going to be a same membership structure. So this is going to unify the membership, and this is going to ultimately ease the way of doing business of the market participants or the members of the both these segments. So stockbrokers who are now registered as a member of the derivative segment, they would automatically have the same status in the cash segment from the 1st April 2019. They would not have to separately apply or separately make compliances for the cash segment. They would automatically become a member of the cash segment from 1st of April 2019. Next is norms for oversight committees at exchanges and other market infrastructure institutions. So SEBI has recently rationalized the constitution of regulatory committees at market infrastructure institutions. What are market infrastructure institutions? Which are basically providing the infrastructure for the entire securities market, like the stock exchanges and the depositories. So SEBI wants there should be proper regulatory framework with regard to these particular institutions, and in this regard SEBI has come up with a way to ensure oversight of functioning of such entities by giving more powers to public interest directors. So public interest directors, they are going to be appointed and they are going to have more powers. Further, SEBI said that stock exchange after grant of recognition can commence trading operations with a minimum of 25 trading members. Earlier this was 50 trading members. So this is going to ease the way of doing business for the stock exchanges. Similarly, a newly recognized clearing corporation can now commence their clearing and settlement operations with a minimum of 10 clearing members. Earlier, they would have to have 25 clearing members. So SEBI is basically easing the way of working of these market infrastructure institutions, but at the same time, SEBI wants to ensure that the interest of the public is protected, and that's why it is giving more powers to the public interest directors. Now, if you learn more about this particular news, then as per the new norms, every recognized stock exchange, clearing corporation or the depository, they would have to have three functional committees. What are these committees? One is member selection committee, second is investor grievance redressal committee, and the third one is nomination and remuneration committee. So in addition to these three functional committees, there are going to be four oversight committees as well, which is going to include standing committee on technology, advisory committee, regulatory oversight committee, and a risk management committee. Further, on each committee except the investor grievance redressal committee, there has to be a number of public interest directors, and this number cannot be less than the total number of shareholder, director, key managerial personnel, independent external persons put together. So there has to be a substantial portion of the public interest directors which are going to basically be looking after the interest of the general public in these particular institutions, because the entire general public is concerned with the proper functioning of these institutions. Now next is transfer of physical and demat shares on par in case of death. Now transmission of shares, which is basically a technical term for transfer of shares after the death of shareholder. So transmission of shares in case of demat shares, this will now call for the same procedure as in the case of transmission of shares in the physical form. So earlier these two procedures, they used to be different, but now the demat procedure is going to be same as the procedure which is there for the physical form. So SEBI wanted to harmonize the procedures for transmission of securities, and that's why this has been done. Both the procedures, they have now been made on par. So up till now, how when investors equity shares they were transferred after the death to their heir, it depended on whether he or she left behind physical or demat shares. So if there were physical shares, the requirements were different, and if there were demat shares, the requirements were different. But now they have been merged. So earlier, while the former, that is the physical shares, they used to be governed by the SEBI LODR, that is SEBI obligation and disclosure requirement, and the later, that is demat shares, they used to be governed by the bylaws and the business rules of the respective depositories. But now the demat shares, they are also going to be governed as per the physical framework, physical securities framework. Now let's discuss some of the MCQs based on the topics we have covered. So here's the first question. SEBI has constituted a research advisory committee which will assist in formulating policy to undertake research relevant for development and regulation of capital markets. It will be headed by, options are Shankar Dey, UK Sinha, Urjit Patel or Narayan Murthy. So we have discussed about this research advisory committee and we have seen that this one is going to be headed by Shankar Dey. So the answer to this is going to be option number 1. Next question. Which is our correct regarding SEBI ICDR committee? Options are, it was constituted in June 2017. It was constituted under the chairmanship of Prithvi Haldia. Both are correct or none is correct. So this again has been discussed by us and we've learned about this SEBI ICDR committee, and both these statements in respect of this committee, they are correct. So the answer is going to be option number 3. Next question. SEBI announced portfolio concentration norms for equity exchange traded funds, that is ETFs, and index funds. According to the new norms, the index shall have a minimum of dash stocks as its constituents. Options are 5, 10, 15 or none of the above. So we have learned about the new portfolio concentration norms that have been put in place for the ETFs and index funds. And as per the new norms, the index shall have a minimum of 10 stocks as its constituents. So the answer to this is going to be option number 2. Next question. According to recent SEBI order, stockbrokers and depository participants using application based on artificial intelligence, that is AI, will have to make dash disclosures on their compliance with cybersecurity framework. So we are being asked about the frequency of disclosures to be made by the stockbrokers and depository participants using the AI technologies. Options are weekly, monthly, quarterly or half yearly. So again we have covered this one, that as per the new SEBI order, these disclosures they have to be made on a quarterly basis. So the answer to this is going to be option number 3. Next question. As per new SEBI norms, stockbrokers in the cash segment who are already registered as self-clearing member or as a clearing member in the derivatives segment would automatically have the same status in the cash segment from. So this one is with regard to the uniformity in the norms for the stockbrokers in the cash segment as well as the derivative segment, and we have seen that this same segment is going to operate from 1st of April 2019. So here are the different options, and we have seen that the same status will be effective from the 1st of April 2019. So the answer to this is going to be option number 1. So guys, these are the answers to the questions. So guys, this was all about our discussion. If you are having any query, you can mail us at hello@edutap.co.in or you can reach us at 8146-207-241. You can call us or you can WhatsApp us. And I would also recommend that you visit our website www.edutap.co.in for regular updates and important content on the respective examinations. Thank you guys. I wish you happy learning and all the best from the entire team.